Kaihan, I'm still smarting from this attack on financial services. Firstly, I thought that, should I just keep it short? But I want to start with the declaration that we're actually a technology company that happens to be in the financial services space. And then I'll talk about it a little bit later. But I think more importantly, I thought let me set the stage a little bit. We talked a lot about financial inclusion in the first section with Kamal, and Kamal, thank you. That's a very, very inspiring story. Just in case you didn't get as he was speaking, by early next year they will be much bigger than M-Pesa, and it'll be the biggest P2B transfer service in any developing market in the world. And that's huge credit to someone who just started this service about 3 years ago. So congratulations and very well done. I think on my side, I just want to lay the construct for in financial inclusion and how we look at it, so that then I'll talk a little bit about what we're doing about it. So in our minds, financial inclusion is critical or important because it does service in 3 different ways. One is it empowers consumers, and Kaihan spoke about that very, very vividly in his discussion. Second is it empowers merchants, which are another critical category in the entire system. And third is it empowers society. And let me tell you a little bit about each one. So at a consumer level, we've got a huge number of people who are doing online commerce and very comfortable with things like PayPal, and who are very, very active in global commerce around the world. The travel, cross-border travel, has never been higher around the world. And yet you have nearly half the world's population, 2.5 billion, who are unbanked. Right? How do you get these across the line is what Kamal is working through. And at this stage alone, today, there are about 62 million people who are looking for humanitarian aid, and only 1/3 of them get it in any shape or form. If you look at the remittances, you have about 252 million immigrants who are making remittances each year. And for every 10% of per capita remittance increase, it reduces poverty by 3% in that country. Right? So pretty startling numbers. And as you look at it, you see the drop-down effect, what Kamal was talking about. It just flows down to society very effectively. On the merchant side, right? So there are about 500 micro merchants around the world, out of which about 400 odd are in developing markets, right? They provide roughly 40% of the world's GDP, 60 to 65% of the world unemployment, right? So pretty critical. Close to 90% of them don't have an ability to either accept payments electronically or make payments electronically. And then if you look at the developing world, nearly 70% of the merchants in the developing world need external financing, but don't get it, right? So that's the world of importance of inclusion for the merchant community. And then you talk about society, right? I think the common misnomer is cash is free. Is it really free? So we've done analysis in country after country in just the cost of cash to the central bank and the banking system. So what is the cost to print, store, transfer cash, disperse it to consumers, take it back? It costs roughly anything between 0.8 to 2% of GDP, right? So not insignificant in any terms whatsoever. And by the way, this does not include a couple of other costs, right? Last we knew that a credit card payment didn't go for a drug deal across to Mexico, right? So you think of cash, it sort of really fuels money laundering around the world, and not to mention, of course, tax evasion and other sorts of crime events that cash promotes. So if you look at it from a societal perspective, it's very expensive, and therefore, in our minds, financial inclusion is very critical. So how do we fit into this, right? We fit into this because we are essentially, and I mentioned it passingly that we're a technology company, but we essentially provide the railroads for money transfer and the intelligence between the money transfer from one place to another. That's really what we do. We don't issue credit cards. We don't sort of, either book the merchants directly or work with the merchants directly, but we provide the railroads, and then we set the rules for the railroads as money transfers. And then we also look at sort of how do we ensure that the money transfer is intelligent. So for example, is there enough scoring to figure out which transaction is a fraudulent transaction or not? And that's sort of what we do. So about 3 or 4 years back, we sat back and we said, let's look at major flows across the markets. We've already done a fair bit of work in the developed markets. We started looking at developing markets, and we saw a large part of the flows were government flows, or there were flows that were happening in cash, right? And government flows were typically going as social benefits or other benefits to the entire community. And then there were a lot of flows, just as Kamal mentioned, among people that were either just plain P2P or there were transfer for goods and services among merchants. And we started to think about how do we get involved in a meaningful way where we can tweak our railroads and tweak our pricing to ensure it's effective and it can make some of this work. I think the advantage we had that because of global scale, that in a lot of times to provide the railroads even for lower value transactions, our marginal cost is zero. However, there is enough cost that we have to do to build effective systems and security for very different sort of payments than we were used to. Right, so those are the couple of changes that we made. So let me give you a couple of examples as to what we did. So we worked about 3 years ago with the South African Social Services Association. I believe that's the full form of SASA. But really trying to understand how they transferred social security benefits to their consumers. They were having a couple of problems. One is they felt that they didn't have enough places that people could withdraw cash from. Secondly, their issue was that there was a lot of leakage. So there were people who were posing as consumers and taking out money, and the leakage was almost close to 30%. Right? And we worked with them to figure out a system. And quite interestingly, you talk about consumer behavior. What came out in our research with a lot of the recipients was, one, they actually, while they liked mobile for money transfer, to keep their money longer term, they wanted a bank account. And they were convinced a prepaid card is a bank account. Right? So not as cheap as the solution in Bangladesh, but it's much cheaper than having a bank account and going to a bank and going into the branch. So we worked with them to do a biometric efficient prepaid. Why biometric? Because a lot of these people couldn't sign. And a lot of the people felt that they were compromised when they had to give out their code or their PIN code to somebody else. Right? So it was a biometric-based account. Parallelly, we also worked then with merchants. So we worked with an agency that's working to grow small merchants in the area where people have these cards so that they can use it. In the first 2 years or so, we now have about 30% of the people who've used it for a non-cash purchase for the first time. Slow, are everybody using it for point of sale just like all of you are? No. But listen, from 0 to 30 in about 2 years, that ain't too bad. And I'll draw out a statistic, right? According to FinScope South Africa 2013 survey, they believe that the Mastercard card for social benefits was the primary contributor for growing the banked population from 67% in South Africa to 75%, and it exceeded their goals. Right, so just to give you a sense, small things, it's not as if you're changing the world. Working in partnership with small agencies, with big agencies, trying to see is there a more efficient way for people to find a storage and therefore have the confidence that the money won't get stolen. By the way, just to give you a sense, for most people who are very poor, they have typically about close to 31% of theft. And theft is typically by family members who steal money from their homes because they know where the cash is. Right? So you think about all of the social benefits of things like this. Second is the state government of Chhattisgarh in India. So this was a government that had a scholarship program in India, and again had similar issues. It had a wrong recipient ratio of 23%, and I'll talk about what we did, and we got to a wrong recipient ratio now of about 6% after 18 months. But the idea was that scholarship money was given to individuals in cash, and typically they spent 60 to 65% even before they went for the course. So by the time they went for the course, they had only 30% or so of the money left. So first thing was, how do you protect that? So we worked out a card system with a chip that had two spaces, and one space only allowed for fees that would be given to the institution that they were approved for. So they couldn't touch 70% of their money. Only 30% they could withdraw for any other purposes. And again, after 18 months, we've got about 14% of the population that's used a plastic for the first time. By the way, for 75%, this is their only bank account that they have today. Right. Third, I'll end with talking about Syria. So with all of the problems that are happening in Syria, World Food Program came to us and said we're really having a challenging time in either paying people or transferring food to a lot of the refugees. and we started dimensioning where the refugees were. And a lot of the refugees were around the Lebanese border. You looked at Lebanon and we said that's a very well-developed market both for payments and for any services. So you really don't need to transport food, where, by the way, close to about 35–40% of food is wasted every year whenever USAID and the World Food Program transfers food. Plus, we're saying, you know, they're not getting any positive inference of being there. I mean, the Lebanese hate the fact that they have so many refugees at their doorstep. So we worked with the World Food Program, again, to create cards, to create reloadable cards for these refugees that were paid on a weekly basis, so that if they stayed on in the camp for every week, they had to sign in and they would get topped up for another week. The advantage is then they used that payment at local merchants. So the local merchants actually got some value out of refugees that were there at the backyard. And net-net, sort of a little bit better than just having people who are sitting in your backyard whom you think are taking away from your society. So I just thought I'd share these couple of examples. I can go into a lot more details, but the idea is to work with social organizations, to work with government, and now we're working with the regulators in most developing markets, to work with companies like Bcash. Is there something from an international remittance point of view that we can help them? Or is there some other way that we can go by tweaking either the way people think of an account, trying to secure that money in some way, do a mix of mobile and a card in some way that they can have, but really try and ensure that more people enter the financial system feel more secure. Thank you.